Hi everyone, welcome to Malethabo Accounting Academy. So on today's tutorial, we're going to talk about the effect that five accounts have on. So I'm about to list these five accounts I'm referring to. So you're going to look into what does income, expenses, profit, capital, and drawings. What effect do those five accounts have on the accounting equation? Right? Before we get into that, I just wanted to bring to light a very important accounting principle, which is known as the business entity rule. Now, business entity rule states that the personal financial affairs of the owner should not be recorded on the accounting books of the business, meaning the business should have a separate bank account and the owner of the business should have a separate bank account, meaning the transactions of the business and the transactions of the owner should not reflect on the same bank statement. Okay, now moving on to these accounts that I want to explain how do they affect the accounting equation. So I want to start off by what we refer to as the proprietary accounts. Now, what are proprietary accounts? Proprietary accounts are accounts that are used to record transactions that take place between the owner of the business and the business. Remember, normally transactions take place between the customer and the business. But with proprietary accounts, these are accounts that are used to record transactions that take place between the owner of the business and the business. Now, the first account is capital. Now, capital, that is contribution by the owner into the business. Now, what effect does capital have on the accounting equation? Now, capital has a positive effect on owner's equity, meaning that it increases owner's equity. Capital has a positive effect on assets, meaning it increases assets on the accounting equation. Now, let's move on to the second proprietary account. The second proprietary account is drawings. What are drawings? Drawings, it is when the owner of the business withdraws cash from the business's bank account. What effect does drawings have on the accounting equation? So drawings have a negative effect on owner's equity, meaning it decreases owner's equity. Drawings have a negative effect on assets, meaning it decreases assets. Now let's move on to the next account, which is profits. What are profits? So profit basically is selling price minus cost price, or income minus expenses. So the difference is what we refer to as profits. So what effect does profit have on the accounting equation? So profits have a positive effect on owner's equity, meaning it increases owner's equity. Let's move on to the fourth account, which is income. Now, what is income? Income is money received in the business, it's money that we receive in the business. Basically, that's what income is. And I can give you examples of income. We've got sales, service rendered. If you are a business that renders service and we get paid for that, that becomes income. Rent income, commission, interest on current account, interest on fixed deposits, discount received on settlement. So settlement discounts received. So those are examples of income. Now, what effect does income have on the accounting equation? Income has a positive effect on owner's equity. It increases owner's equity. Let's move on to the last account, which is expenses. What are expenses? An expense is the cost of running a business. So it is a cost that a business incurs by running, basically by operating. So that's what expenses are. I can list examples of expenses. We've got cost of sales, we've got rent expense, electricity, telephone, travel expense, repairs and maintenance, packing material, internet. There's quite a lot. There's quite a lot of expenses that I can basically list. Electricity, there's quite a lot. So what effect does expenses have on the accounting equation? Expenses have a negative effect on owner's equity. Expenses decrease owner's equity. Okay, no, now that's what I wanted to basically talk about in this video. Let me just quickly summarize what I've just said. So I listed 5 accounts and I explained the effects that these 5 accounts have on the accounting equation. So I said capital. Capital affects 2 things or 2 accounts on the accounting equation, which is capital and assets. So which is owner's equity and assets. So capital increases owner's equity and it increases assets. And then I mentioned drawings. Drawings affect 2 accounts as well on the accounting equation, which is owner's equity and assets. So drawings decrease owner's equity and decrease assets. And then I mentioned profits. Profits increase owner's equity. Then I mentioned income. Income increases owner's equity. And lastly, I mentioned expenses. Expenses decrease owner's equity. Okay, yes, and I also wanted to bring to light that your accounting equation should always balance. So what does that mean? So that means that the addition, so let's look at the structure again, or the format of our accounting equation. It says assets is equals to owner's equity plus liability. So when I say your accounting equation has to balance, I basically mean when you add your owner's equity and your liabilities, that figure should be identical to the figure of your assets on your accounting equation. Okay, yes, this brings today's tutorial regarding this brings our today's tutorial regarding accounting equation to an end. So this is part 3 of the accounting equation and is the last video that I am making in respect of accounting equation. The next video will be based on general ledger, also known as T accounts. Thank you very much for watching. You are more than welcome to comment down below if you want some clarity on anything based on accounting equation. You are more than welcome to ask me questions on the comment section. Thank you very much for watching once again.